Yes, so good afternoon, everybody. Apologies for the delay. We had a bit of a technical difficulty, but very nice to see you attending this new Quantero Global webinar. My name is Emil Monfils, and I'm joined today by my colleague Adrian.
Yeah, good afternoon.
And today we will be discussing with you what to expect for 2023 from a transfer pricing point of view. So in the next 60 minutes, we will be discussing a couple of topics, also taking a bit, looking back to 2022, and then moving on to what we expect to see in 2023. If you have any questions for us, then please use the chat box or the Q&A box. It should be that we will see any questions you are putting in the chat box, and we'll try to discuss them during the session.
Yeah.
So let's see what we will be doing the next 60 minutes. So first, I think a recap of 2022, and then slowly moving on to our expectations for 2023. So looking at the next slide, that's one for you, right?
Yeah. Thank you, Emil. Adriaan van der Heijden. Let me first briefly discuss the recent legislative developments in 2022. Maybe in the next slide, we can see some publications throughout the year. Obviously, there were lots. We could include 50 more bullet points on this slide, but just a high-level overview to give you a feeling that, quite a lot of things happened during this year. We also expect next year to be full of surprises and new developments. To give you a bit of flavor, basically in January, the new transfer pricing guidance was published by the OECD. Nothing really new there, especially Chapter 10 was included, but the final publication was already published in 2020, so no changes there. But then again, tax authorities already had 2 years practice, basically, with the financial transactions guidance, and now it's also officially included in the full package. I will discuss a topic later on a little more in more detail. But that's something that happened in January this year. There were also some rules, the GloBE rules as mentioned, so Pillar 2, basically entails the minimum tax of 15% for companies, multinationals with revenues above 750 million euros. Had quite a lot published in this in 2021 as well, but in 2022 there was also some attention for this topic, and in 2023 it will be even more important for companies to consider. So some more high-level examples are the Brazilian announcement. Brazil is quite a, how can I say it nicely, a pain in the, you know what I mean? But they're also moving towards the OECD, so that's something that I think from our perspective is a welcome development. But happy to see how it evolves throughout the years. DEBRA, and the European Commission published a proposal on DEBRA, but I will discuss that on the next slide as well. From a Dutch perspective, we have the new transfer pricing decree, and also a lot of important aspects, especially on financial transactions, but that's something I'll also cover in the next slide. Also a new Dutch decree on permanent establishments. So we had a lot to read this year. And finally, there was some update on the CBCR guidance, including some more detailed information and elaboration on some specific topics. And the OECD published a BAPA manual, bilateral APAs. That's high level what we saw throughout the year, but obviously there were a lot of more developments to cover. Maybe the next slide. What we see in financial transactions, it was quite a hectic year. Financial transactions, I think as of 2018, more attention from tax authorities. We also see multinationals struggling with this topic. but also a lot more audits coming in this field. Tax authorities are also developing their skills, and we see a lot of scrutiny in this topic. So that's something to really consider. If you haven't done it yet, there's no escaping it now. In 2022, there obviously was also the significant increase in interest rates. So not only the developments, legislative developments were important, but this is also something to consider. Basically, performing an interest rate analysis covering a period of 3 months or 6 months can really increase your interest rate. So if you look at the interest rates in December last year, and if you compare it to today's interest rates, you also are aware of it on your mortgage loans. So there's a real steep increase on this topic. So that's something that's very important. Yeah, as discussed in new OECD guidance, chapter 10. No real news here because it was already published in 2020. The Dutch transfer pricing degree, what we see here is mainly the so-called flow-through companies, so the intermediary financing companies in the Netherlands are really under scrutiny and also on specific attention from the tax authorities. There's also a lot of uncertainty on this topic. But one takeaway is that what you always did in the past, it's not necessarily that it will still be viable in the future as well. So you really have to look into intermediary financing companies in the Netherlands. Won't bother you in too much detail with this topic today, but if that's relevant for you, then please contact your advisor on this topic. And finally, Deborah. So Deborah, what is it? Emil asked me, is it a girl's name?
Yeah.
No, it's the Debt Equity Bias Reduction Allowance, and it was published on 11 May this year. And basically, it's to incentivize equity, because and for tax purposes, debt is, from a multinational perspective, mostly preferred due to the deductibility of interest. But this proposal aims to introducing a notional interest deduction on your equity part as well. There is also a further increase in scrutiny on further increase in limitation of interest deduction as well. So it's really moving forward to each other. It's not finalized yet, also not implemented yet, but this is something, a development you should also consider in the future. This may also impact, obviously, your debt equity mix, both from a tax perspective, but also in a business perspective. Also, the increasing interest rates is something to consider here. So just to give you an example, if in the past, 80% debt and 20% equity mix would be viable, it's not really sure that will be viable again in the future. I think
this is a short question from my side, Adrian. Deborah, it is only applicable to European companies, right?
Yeah, correct. Yeah. So what you also see is indeed some takeaways on this part is to also consider that in your comparability analysis. If equity and debt is not treated similar in, for example, Europe and also in the US, that's also something to consider. So you really need to be aware what you're doing with your funds, how you're arranging your funds and liquidity throughout the group. So a good question, thank you.
Okay.
Shall I give you the floor now on some other developments?
Yes, thank you, Adrian. So perhaps we can go to the next slide with a very beautiful picture on it. Now, some developments, and they will probably be very familiar to you guys. Remote working accelerated throughout the COVID period, and in principle, as I currently see, never left. Still, everybody is working a couple of days from remote, from home. And now we definitely see that it might impact the M&Es, the company's business model. Why you then say, well, from a transfer pricing point of view, we look at the value chain. We look at where is value being created. So it is location, who is doing it. And as you may appreciate, when value is now being created somewhere else, you might come across difficulties. You might have difficulties with tax authorities claiming that, for example, there might be a permanent establishment. So one of the main developments that we see is that also now the companies, the M&Es, are really looking at their business model, their value chain, and redefining it, making sure that profits are allocated there where the value is created. The same goes for the substance part. More substance. You will see a bit later that so-called shell companies. Well, that is not done. So profit is only can be allocated to companies that really have substance. Substance in the sense of people working there are really operational, but also making sure that there is, for example, value being created. And the same goes around for ATAD, ATAD 3, which is then the let's call it the Shell Directive, trying to ensure that companies cannot use an empty shell entity anymore. And I think the original implementation date will somewhere be 24, if I'm not mistaken. So yeah, it's preventing the misuse of empty shell companies and entities. Developments, controversy. What do we see? We see much more TP cases, court cases, there where the taxpayers are being challenged by tax authorities on different kinds of intercompany transactions, on rulings, content of rulings, also that you've seen with probably the state aid case with Fiat. Something that definitely was seeing in 2022 was a number of court cases, TP cases. And there used to be not many cases, but these are increasing rapidly. Then we also see the number of MAP procedures also a bit increasing, of course, as you may appreciate, when there is a dispute with the tax authorities ending up in double taxation. Well, you will try to use the MAP procedure to at least ensure that there's no actual case of double taxation, so that competent authorities speak to each other and have discussion on what should be the outcome. Let's see. On the MAP procedures, I think there's also been recently an OECD publication. I think it related more to not 22 but 21. It showed the statistics of the OECD countries on the number of months or the time it will take to start an MAP procedure and as well finalize it. I think it even provided some awards. So yeah, it's becoming more of a competition to make sure that your MAP practice runs smoothly and efficiently, as you can probably then also get awards for it. Then a final development, something that we really would like to touch upon is the recently published OECD guidance on the BAPA practice, the BAPA process, and it provides a bit of a BAPA manual. Let's see, and it is quite nice. I think one of our colleagues, Richard Slimme, he wrote a small blog on his takeout of this BAPA manual. So if you have the chance to read it, then please do. Let's see. Are there any items that I would like to discuss more? No, I think the main takeout from this BAPA manual was to ensure that the tax administrations and taxpayers have an efficient process, and thereby transparency, collaborating with each other, mitigating delays. Because as you may appreciate, anybody who has been involved in a MAP procedure, BAPA procedure may know that it could take quite some time to end up with a nice outcome. Yeah. Any items from your side on that?
No, not really. I think we can move forward to the general economic developments.
Yeah, also quite nice indeed. Some general economic developments that definitely have an impact or will have an impact on your transfer pricing policy or your tax policy, and something to deal with as a company. So it is not a really big secret. We're having a bit of a staff shortage in all industries.
Not only our company.
No, not specifically our company, Adrian. No, indeed, no. I think what we see is that there are really a demand for really good people having the certain experience, the knowledge, the quality to fulfill, in this case, for example, your tax position or your transfer pricing position. And as you may appreciate, without having those people around in your department, all the work will pile up. And in a current situation where tax authorities are getting a bit more aggressive, you do not want to have delays on your discussions.
It's also funny that you're mentioning it, because I think what we see at tax authorities, they have increased capacity at this stage. So they really have been on the other side. So there's also something from the past years, I think. So there's also something to consider as well. You will get more questions from tax authorities. They have more hands, so to say.
Yeah.
While, in general, multinationals struggle
having difficulties with fulfilling all the places that are currently open, vacancies. So I think also, that there's a really economic development that has impacted and is still impacting the business of companies, but also looking at our own practice, Adrian. The need for really skilled transfer pricing people, advisors. So definitely what we see is that people are being asked for to have an interim role, just to make sure that those transfer pricing tax items can be picked up immediately. Something also that will not come as a big surprise is the inflation. Everybody's speaking about, I think in the Netherlands, November was around 11.2%. Unbelievable. But it's not only in the Netherlands, it is everywhere. And it has a big effect on companies. Also taking into account the intercompany transactions that we normally see within M&Es. For example, in this case, the royalties. What we see is that royalties are being charged to the companies on their third-party sales. So in case third-party sales do increase because the price increase, but the other costs, your OPEX and your royalty increase significantly, what will then be the effect on your margin as a sales company? In this respect, a sales company not performing a routine functionality, but more of a profit and loss responsible functionality. We now currently see in practice that a couple of M&Es are really struggling with that. How to deal with the inflation, how to deal with the intercompany transactions as such, as they also agree, and increase specifically the royalty. Because the royalty is something that is charged and looking at your turnover. We see companies struggling with that. And so then you have to try to come with a solution that will be suitable to the business model, to your value chain, but would also then mitigate any risks on local discussions with tax authorities. So you could probably say, well, let's take a look again at the benchmark study, which provides a certain interquartile range. Would it then be possible either to use the full range, taking into account the economic developments, the circumstances? So in that respect, it provides certain difficulties, but also opportunities. And then a last item on this slide is automation. Again, this is connected with the staff shortage. You will see that you have only so much time to perform your business, and you want to make sure that your time is well spent. Companies are really trying now to look at processes and to see where they can make sure that it's more an automation item. So that is also something that we see much more. Also with respect to the transfer price documentation process. In some cases, there's not a lot of change within the business model, but of the entire M&E group. So updating the transfer pricing documentation, for example, the master file, the local files, is something that should in principle not take a lot of time. So automation would be a very good option to make that a much more efficient process. No. Okay. Let's see if we can go to the next slide. This one. I think this is the slide and the slides that we will be discussing that will have your biggest attention, right? Because these are the expectations for 2023, which is not that far away from us. I think we're now in December 1st. Yeah. So let's give it a month, and then we are entering the year 2023. So let's see, what does 2023 have in store for us, Adrian? Now, let's see. I think we discussed a lot of items already. So let's go through them. I think more need for automation, something already discussed. That's given the fact that we're trying to improve all our processes, trying to make sure that we use our people, our workforce in the most efficient way. What we see is more transparency. I think all the new regulation, the new publications of, let's call it regulation with abbreviations, DEBRA, BFIT, everything. It's to increase the transparency to from the taxpayer towards tax authorities. And as you then may appreciate, when we have much more transparency, there will be much more information, data available for tax authorities and later on for public. That is something that we will discuss a bit later, to have their own opinion about. Mm-hmm. So something that our crystal ball definitely shows is more transparency, a more aggressive approach from tax authorities. Also, why? Because, well, we have seen during COVID, Treasury, a lot of income needs to be again filled, right? So we also see that the tax authorities do indeed have sufficient workforce to go and see into the transparency, the information, the data, and to have their own opinion about it. So that could also then lead to an increase of the number of transfer pricing disputes. One part of the transparency is the master file and local file. And we definitely now see that there's more an increase by tax authorities when they review the transfer price documentation on really the quality. It used to be transfer price documentation from a taxpayer's point of view, you might have it in the sense from, well, I have documentation, I'm fulfilling the legal obligation to have transfer price documentation, but the content, well, I just put something on paper and let's wait and see. Now we definitely see that tax authorities are really reviewing, going through the transfer price documentations in depth. Transfer pricing documentation consisting of master file, local file, benchmarking. Even the benchmarks are being reviewed really to the detail. Going through the accepted companies, looking at rejected companies, and to say something about the, at arm's length nature of the intercompany transactions within the M&E. Then, again, Adriaan, an abbreviation.
Yeah.
BFIT. BFIT, yeah, again, very nice, like Deborah. BFIT, what does it stand for? Business in Europe Framework for Income Taxation. What is it aimed at? It is implementing, trying to implement a common corporate tax system across Europe. Again, this is a European regulation that they want to implement, and this is specifically for really large M&Es. Something that you might say replaces the CCTB directive. Again, abbreviation. Something that was a very hot item. How to calculate it? What should be the common base?
I think we discussed that 15 years ago when I was still in college.
Yeah, exactly. So yeah, that is something that we are now really seeing and also expecting, looking at our crystal ball, changing the playing level field of M&Es within Europe. Looking at a standardized or common taxation base, looking at a minimum tax rate of, I think, 15%. So all kinds of different initiatives to change the playing level field, but also in view of base erosion, tax evasion, and tax avoidance.
Definitely.
Let's see if there are any items. Yes. That is something that just was recently published in the news, Adrian, and I definitely would like to hear your opinion about it. It was the news about the Dutch government to have a bit of a kind of an internet consultation round on, let's call it, remarkable tax constructions.
Yeah.
I don't know whether you have did read it. It was a very short news item. But again, I don't know. The purpose, of course, is to ensure that there are no tax evasion schemes anymore. But
or is the purpose to get funds on tax authorities' perspective?
You might indeed think that this initiative would again be aimed at trying to get as much as funds as possible.
I think it was even included in the publication by the tax authorities, so that one of the goals was to increase the treasury part. So yeah, but basically, what does it mean, Emil?
So yeah, it provides. I would think individuals that could, say to the tax authorities, I think there's something wrong with a certain tax scheme, and I would like you as a tax authority to look into it, because I think there's something smelly going on.
I think that's a very dangerous development, right? Because basically, if I don't like you, I can basically fill in the form, report something, even if it's not really that schemey.
No, so I'm very happy that you really like me as a person, so that I will not have that kind of issues. But indeed, it's a really changing world.
Yeah.
It's changing in such a way that you see a lot of initiatives like these on yet a Dutch local level.
Yeah,
and I think European countries are looking at each other. So you might expect that also other kinds of European countries will perhaps also do something like this. So yeah, it is, I think, quite interesting, perhaps a bit scary also. So that will mean definitely, could you do something about it? Of course, you can prepare yourself, and that's something that we will discuss a bit later in the next couple of slides, how you could prepare. But Adrian, tell me.
Yeah, maybe I think this was your slide, Emil, but from a finance part, really, looking forward, not really looking forward, but curious how 2023 will develop, both from an interest rate perspective, but also consequently from a debt funding perspective. So will companies still keep that 80-20% ratio, for example, or will they go into more equity, and also preparing not only for DERA, but also taking into account the increasing interest rates? So that's something that will show 2023 will show. So we can't really say something about it now, but it's something to consider also for your transfer pricing analysis. And then again, obviously, but that's also listed here. I think transparency, audits, also audits, especially on financial transactions, because you see increased skills as well from tax authorities perspective. And the burden of proof is something that will be really, really important. Great. I think we can go to the next slide.
ESG, environmental, social, and governance. Also, some of the items to really look at. I think, again, transparency and providing a lot of information, a lot of data, and sharing it with the public country by country reporting. Currently, you have a country by country reporting that in a situation in which the M&E provides information to tax authorities, and that provide certain information on revenue, third party transactions, FTEs, but also where are you located, what are the main activities, functions being performed. It provides a bit of a, let's call it, overview of the company, of the M&E itself. And then connecting dots with each other, trying to also see, hey, are there any low tax jurisdictions within the group, and how much income is being allocated to that specific entity in that low tax jurisdiction, and is it understandable looking at the number of FTEs and the functions that are being performed. So one of the items is transparency, the public country by country reporting. And then what of course happens if it's been a bit more political and publicly driven item, I feel, because in this case, the public has something to say or to think about this specific report that is made available. Looking at what you will probably have to provide is something that could harm you in such a way that it will end up in reputational damage. It might be the case that there is indeed a business model taking into account the countries where you are located. And there might be a really specific reason why you are located there, because you have really good business there. Without any guidance or explanation on those kinds of items, the public will definitely think something about the information. So you will definitely get questions, and it's something to think about. And also next part, it's a bit of the tax policy updates, which you which I think would speak for itself. Okay.
Yeah, I think already briefly discussed previously, but maybe a little more detail on this part. We see really an increase in court cases and transfer pricing disputes. So that's something that's really becoming relevant these days. And also, the tax disputes are not all on 2022. It's basically looking back even to 2008, 2012. So it's something to consider. That makes transfer pricing documentation at this stage even more important. But what is it basically? There are a few key items to consider here, and also some developments in this field that are quite challenging, both from a taxpayer's perspective, but also from an advisory perspective. But what we in general see, obviously, there's no one size fits all solution, and also no one clear ruling on each matter. But what we see is that judges mainly rule in favor of the best prepared party. And obviously, maybe, very logical. But then again, best prepared. So that means that you at least should already have something in place. Also, regarding the burden of proof. So that really starts with your transfer pricing documentation. Then again, transfer pricing is not it's more an economic expertise. And there's also no, what I said, one answer that you can give on each question, on a specific question. And if you, for example, ask 10 different transfer pricing advisors on a specific matter, you'll probably get 8 or 9 or even 10 different answers. And there's something also to consider for judges, basically. They not saying that they lack knowledge, definitely not, but they have maybe a different view on specific matters. Where, for example, in practice, it's quite common to use approach X. But then again, from a legal perspective, you can consider that A may also be defendable. And how can the judge really say that A is better than X or not? So that's something to really consider here as well. So documenting your choices, defending your policy, good solid write-ups, documentation, etc. So that's really key in this matter. That's also a matter of quality versus quantity. I think that's also something to consider as well. What we see is a lot of transfer pricing documentation containing 100 pages, while 70 pages are not really that relevant. And I think it's also very important to look at what you really include in the documentation. So obviously having paper is better than having nothing, but sometimes it really isn't. So it's really important to have quality in place. As discussed, the shift of burden of proof to the taxpayer if your documentation is not solid. I think, Emil, you also had a case where one specific comparable in a benchmark study was challenged. And then they may even argue that your full documentation package is insufficient. So there's also some aggressivity from the tax authority side. And it's also a formal discussion versus content. A little bit into what I just said. Transfer pricing is economic expertise as well. But then again, there is also some formal legislation you should fulfill. For example, if you are 2 days late in filing your transfer pricing documentation, obviously you're already behind in the match. And as a last thing, I would like to give away is that going to court, definitely it's always an option, but it's really like roulette. The outcome is so unclear. Even if you are so convinced of your position, as already said, it's so difficult. If you ask 10 people the same question, you will get 10 different answers, and the judge has something also has to decide on a specific matter, also based on arguments provided by the taxpayer, but also by the tax authorities. And you really can't say what the outcome will be. So there's a risk in that as well. Yeah, next slide, please. Yeah, and I think some specific developments in the field of transfer pricing documentation. No real news here, but what we see is that more countries are choosing to opt for proactive filing of transfer pricing documentation. So that means that you have to really file your master file and local file to specific tax authorities. Well, obviously, not every country does it, and most countries still have another approach where you have to provide documentation upon request. So basically, if the tax authorities request transfer pricing documentation, you have a month or 10 days, depending on the country, to provide the documentation. But a lot of countries are moving towards proactive filing, and that also entails risks for the multinational as well, because if you don't file, you're already you can already get penalties on that part as well. So it's really important to look into these filing requirements and obviously the deadlines. What is transfer pricing documentation? I won't bother you with that, but you have the master file, local file, benchmark studies, and TP forms. But all these documents can also be country specific. I think 90% believes that the master file is sufficient for each country, but that's not the case. So there are specific countries that require specific items to be included in the master file. So that's also something to consider when you're looking at your transfer pricing documentation package. Yeah, obviously the same goes for the local file. There are a few matters in this respect, what you have to include in documentation, but also, for example, the language of the documentation, also something to consider. For example, penalty protection in Italy requires Italian documentation, but I can give 10 examples where you have to provide local language documentation. Same goes for benchmark studies. Some countries prefer to have specific country comparables, so you have to look into comparables of that specific country, while in practice, usually we see Western European searches, for example, also due to data availability, because you can find sufficient comparables in one specific country. And as a last part, that's the transfer pricing forms. A lot of countries have specific TP forms that should be filed, and that's also something to consider as well.
Adrian, I think we have a question from one of our listeners. Let me read up loud. This is something I think definitely relates to your slide where you just talked about.
Yeah.
Do you think I can better prepare my TP documentation centrally or locally now that quality and consistency becomes more important, much more important?
Yes, that's a good question. I think it really depends on the multinational and its setup. Obviously, if you're based in 200 countries and you want to manage everything centrally, that may be a challenge. Then, obviously it's always possible, especially with automation, of course. And I think it's always good to know what is written in each country. Otherwise, as tax manager, you will be surprised if you are on an audit and requested by the local company to support you. You can come across not so pleasant surprises. But it really depends. So a combination is always possible, where you have a local responsibility, but also a central responsibility. But it really depends for the multinational and also how it's set up. Is it a central transfer pricing model, decentral model?
I agree. I think it's also very important to take into account the risk appetite of the M&E itself. Also taking into account where you are located, what are, for example, the penalties? Are they quite high, low? What are the penalties anyway? Are there any penalties? But I would definitely agree with you, Arjan, that you would say something really to think about. Do you want to put so much responsibility locally where you should perhaps manage it centrally? Also in view of, is everything being applied consistently? For example, I could assume that you have something written on a paper about your TP policy, but is it really exactly being implemented as such?
Yeah.
So, Very nice question. Thank you very much.
I
Yes.
think that was also one of the items included in the next slide. So how to prepare yourself. Consistency, what you just discussed.
Yeah. I see. Yeah.
Yeah. That's very important. If you write in something down in country A, that's not really in line with what you write down in country B. Yeah, obviously that really triggers a lot of questions, and also will put you behind in when under audit. So consistency is key. And that would favor basically a central managed transfer pricing documentation approach. So that's really important. Quality status is very important. So don't really go into paper. The number of paper, the number of pages is not really leading here. It's more the quality.
Yeah. So quality above quantity.
Yeah, definitely. Yeah. Yeah, but maybe also to give a good example, the more you write down and the more terms you use, it's quite easy for a tax authority to challenge. They only have to find one word they don't like. They already have an argument to challenge your full TP documentation and TP policy even. So sometimes it's even better to have a brief transfer pricing documentation. Obviously, you should always fulfill every requirement. But sometimes it's better to not provide full details and just be a little bit more pragmatic there.
I agree. I think from a transfer pricing point of view, I would say the transfer pricing documentation provides a bit of a storytelling.
Yeah.
It provides the story, how the M&E operates, what's the business model, what's the value chain. You would like to provide the facts and circumstances as well as possible.
Yeah.
But also mitigating any risks about being misinterpreted by the reader, in this case, the tax authorities.
Yeah, I think that the 4 eyes approach is also definitely relevant here, because if you write something down, someone else may interpret it very differently.
Yeah.
So that's very important as well. I think it's also, and also based on that principle, it's always also key to let the board have a quick look at it. If they read something also on a strategy part that they don't like, then that's also something to consider. You should also always be flexible towards coming years, because if you write something down now and you want to change it in one of the following years, then yeah, you also have something to explain from a tax perspective. So better already include some wording in your current documentation to mitigate that risk. Yeah. So that's basically the alignment of transfer pricing documentation. Very, very important. Also include the local requirements, as just stated. Really look into those requirements. One standard template may not be sufficient. You really have to fill it in every country based on specific templates and specific items as well. Yeah, we see also a lot of tax authorities imposing penalties, and increased controversy. And reputational risks. So that are basically the risks we see from a transfer pricing perspective. And how can you mitigate that part? So how you can prepare on this? There are a few options, I think. It's very important to check your current setup. So your current situation, your transfer pricing documentation, but also your transfer pricing policy, and also how you deal with specific cases. And evaluate the risks you have. Obviously, you don't always have to go for 10 out of 10, but sometimes it is necessary, and sometimes you can go for a 6 out of 10 approach, basically. But it really depends also on your risk appetite and also on the specific countries. In some countries, you want to be better prepared than in other countries.
But I think with the increasing aggressivity of tax authorities, I think the main key here is to be prepared and not await any questions or audits from tax authorities. So yeah, I agree. Yeah.
Yeah. I think we discussed.
Again, something on documentation, benchmarking. I've got a next question, and it has a bit of a financial transaction feel about it. So I hope you definitely could answer this one, and then moving again to the next slides.
Yeah.
A significant rising interest rate.
Yeah.
Now, of course, then it says here, do you think I can still use a loan pricing grid or other interest rate benchmark studies, or should I update it more often?
Yeah, okay, that's a good question. That's more, I think, also regarding financial transactions. What stated is the interest rates are increasing. So monitoring is also very important. I think that there's a difference, basically. A pricing matrix and pricing grid approach is something, more of a pragmatic approach for companies, I think, that provide like 50 plus or 10 plus loan transactions within the company, so intercompany loan transactions. I think that's something, it's advised to update that on a more regular basis. So where you could update it previously like once a year, maybe better now to update it once a month even. But then again, it's always a choice of the company as well. What's your risk appetite? For other loan transactions, where we see, for example, 1 5-year loan, if a 5-year loan is issued towards a borrowing company, then the theory is that you set an interest rate for 5 years, basically. And within those 5 years, that interest rate is quite stays the same, basically. So,
right.
And there you have a difference between floating and fixed interest rates, but maybe that's something not to discuss today, because I can fill a webinar on that.
Then definitely the next webinar will be on financial transactions, floating interest rates, etc.
Yeah, I'm getting a lot of questions now, but maybe first.
Looking at it, I think it would be good to finish up the slides. I think we still have some couple of minutes left. So going back to you, Adrian, or would you like to say something about the key considerations?
Maybe just a little bit of key considerations. What is important? What is the impact of the economic services inflation on my business and transfer pricing policy? This is basically a combination of what we both told today. So the inflation is very important. If costs rise significantly, what to do with, for example, royalties, what to do with interest rates. Interest rates have also significantly increased. So it's always important to look at the total package, because you can change one parameter or don't change any parameters, but then the outcome can still be very negative from a specific country's perspective. So it's always important to keep that in mind and focus on the whole package. I think that's very important. So 2022 was a very, very, how you say that, basically, there have so many things happened in 2022. Really, it's, I think it's also important to be aware of that. So if you have been a transfer pricing practitioner, or even a tax manager, or CFO, transfer pricing has changed throughout the years, but I think 2022 has been really, really difficult for a lot of companies, and there are really a lot of challenges to face. So that's important to be aware of. Then again, that's also in line with the transfer pricing documentation. So is your transfer pricing documentation sufficient? The quality sufficient? Having paper mitigates a part of the risk, but could still be very much challenged. Also, what the example I gave before, where one specific comparable may be challenged, that could really also impact your transfer pricing documentation. In a broader perspective, am I in control of my transfer pricing? Should I consider automation, for example? That's something to ask yourself. But also, are you in control? For example, for cash pooling, do you look at structural positions within a cash pool or not? So that's something to consider. But also, what do you do with the increasing interest rates? What do you do with the inflation, etc.? And that also really impacts transfer pricing. And I think also the remote working is a very important aspect that may be less relevant before 2020, but nowadays that's something to really, really consider. Yeah, and what I said, from a Dutch perspective, it is very, very important to look into your intermediary financing companies. If you have any, then yeah, you really should be aware that the setup that was used in the past may very well be challenged as of now. Maybe do you have something to add, Emil?
No, I think what I probably will, what I see and what I expect to be will be increasing is that the tax and transfer pricing will definitely be topics to be discussed during board meetings, and the impact can be very high and the risks the same. So I would definitely expect that as a transfer pricing professional, tax manager within M&E, you will definitely would have this covered during board meetings, making sure that there really will not be, or you are mitigating any reputational risk. Also with respect to public CBCR information or other information that will be shared either with tax authorities or with the public. So yeah, indeed.
I think, shall we wrap it up? Or we have 2 more slides?
Yeah, we have 2 more slides, but
then we can quickly answer a few questions. But
I think we're really running out of time. So there are still a lot of questions coming in right now. So perhaps we would then be wise enough to make sure that we will discuss these questions a bit later offline. But what can you expect from upcoming webinars? Again, on the 8th of December, so that's next week. What to expect in 2023? I think it will be something like this webinar.
Yeah, so it's not a part 2, but basically, because December is a very busy month, we want to provide people the opportunity to dial in.
Yeah. So in all probability, you will then it will then be us two who will be presenting it. On the 19th of December, the top 10 critical TP issues from an Indian and Dutch perspective. I think this will be presented by Akshay in India, but also by Theo, who is currently in India on a business trip, discussing various TP transfer pricing items with multinationals there. I think also, I believe Pillar 2 was part of the questions that they there have. 2023, a lot more of webinars to come. So yeah, looking at the time, perhaps it's good to wrap it up. If we look at the last slide, that will be the thank you slide from us. Very happy that you have participated in this webinar. I hope you have heard some items that really speak to you and think about the risks, the mitigating risk, transfer pricing, documentation, legislation, etc. It says here we would like to if you really want it, we can have a sort of a free of charge high level scan of TP documentation. It will not be that in depth. It will just give you an idea on, am I on the right track, and what kind of findings do you see and have when looking at this TP documentation.
Yeah, maybe one, because we started a few minutes later.
Okay, yeah, sure.
Shall we do one question? I think this is a very interesting one. Considering remote working, do you see any potential impact on the company's value chain?
I think just as a very good question. I think I discussed it a bit earlier during one of the earlier slides that remote working does affect in a certain way and to a certain extent the business model of the company, but also the value chain. From a transfer pricing point of view, we look at function, assets, and risks. We look at people performing those functions and the location. Where are they located? So, for example, looking at IP, in order to see, we have the DEMPI function: development, enhancement, maintenance, protection, and exploitation. That's something that we fill in. But for example, if the development now is taking place in 2 different kinds of locations, how should you deal with that? Because it might be the case that the R&D director is working from home more of his time. How would that then impact the the value chain itself and the way you would allocate profits to that function if it is a core function.
Yeah.
So definitely, I definitely see a potential impact on the value chain.
Okay. Yeah, I think now we really have to wrap it up. So
yes, from both of us, thank you very much for dialing in and listening to us two guys on transfer pricing and what to expect 2023. Sorry. Also, I would like to thank you, Adriaan.
I would like to thank you
for this great session. Hope to see you soon. If you have any questions, then please use our contact details on the slide, but you can also find our details on our own website. Thank you very much. Have a very nice afternoon or evening, and hope to see you soon again during one of the other webinars. Thank you very much.
Thank you.
Bye-bye.
Bye.